Hello and welcome back to Game of Trades. My name is Peter and today's video is going to be a very important episode. The market has been going sideways for the past couple of weeks, so a very low volatility environment, but there's a lot of things that are going on under the hood. So that's exactly what we're going to take a look at. We're going to take a quick look at the technical picture of the S&P 500, what we're expecting over the next few weeks. I want to then take a look at the dollar. The US dollar index, it has been rising over the past few weeks. And so that changes everything from the environment that we were in throughout 2020, the weak dollar environment that was pushing all asset classes higher. It was pushing stocks higher, gold higher. But now all of a sudden, the dollar is starting to strengthen and raising some concerns for asset holders. So we're going to discuss whether that's a trend that's set to continue or reverse and continue the dollar bear market. We're also going to take a look at tech, the Nasdaq 100. It's been very weak over the past few weeks, and we all know that the bull market since 2009 has been all about tech. Without tech, the rally would have been considerably weaker. So are we starting to see a reversal of this tech outperformance as interest rates have risen over the past few weeks? Those are all things that we're going to cover in this episode. So without further ado, let's get right into it. So let's start off with the S&P 500 on this weekly chart, right? So this is longer term, going back to the 2009 crisis here. And we have this channel. This is something that we've been taking a look at for the past few weeks. This is on logarithmic scale. And so this is the price channel that you should be watching, right? It's a very significant area of both support throughout the bull market and resistance right here in 2014, 2018, and now in 2021, we're currently testing that level of resistance as well. So that's very important to note and keep in mind from a swing trade standpoint, you're at resistance. So we're not talking about investments. We're not talking about long-term picture. If we're talking about trading, you do not want to be taking long entries here, right? Even from an investment standpoint, you want to be maximizing your returns. You want to be entering near the lower range of this price channel or at support on pullbacks to this blue line right here. Now, if you're so far enjoying this video, make sure to drop us a like. It really helps our videos get pushed out to a wider audience and enables our community to grow. So thank you very much for doing that. But if we take a look at the daily chart on the S&P 500, so zoom in right here, there's a very interesting picture that's developing. So first of all, right, we have a reaction, a second reaction right here, further confirming that there is selling pressure at this level of resistance. This is a valid point of resistance. We were talking about it before these reactions occurred. We came out of our long positions on the S&P 500 right here. And so we've been watching this sideways grind on the stock market, waiting for that technical picture to clarify. And now what's going on? We have a second reaction, but this reaction is very weak. And you can see what's happening right here. We have a bull flag developing. Now it's still unconfirmed. It hasn't broken out properly yet, but this is bullish price action, right? We have a nice, powerful leg up, a sideways consolidation, and potentially a breakout that could fuel finally a move past this level. Right? That's what the markets want. And that's what trillions and trillions of dollars will do to a stock market. It will make prices go up. So would it be a surprise to see this kind of breakout? Absolutely not. It's definitely a potential scenario that we could see, and that could start fueling some larger moves on the S&P 500. It wouldn't be the first time this type of development happened, right? We've got many examples where we have the stock market break above support and then resume. Same thing here in 1997, break above support, then resume. So we'd be in that kind of scenario and we'd have an acceleration of the uptrend if that happens. Now, I do have one more thing to show you guys on this chart, and we posted that on gameoftrades.net for our members. We were previously looking at a price channel on the S&P 500, right? We had a nice line of resistance that was telling us when to start looking to book profits on our long trade. And we had a nice support level throughout this period. But recently we've had this expanding volatility. So we can remove that support that's no longer valid. And what it's starting to look like is a megaphone pattern now. So you've got quite a few reactions on this trend line, and you can see price goes up and down, tags the top, tags the bottom, tags the top, bottom, and perhaps the next move is tagging the top of that line again. So we're going to see if a bull flag type of price action could potentially make us tag that line. So let's take the measured target of that bull flag, which would be the length of the first pole, just copy and paste to the breakout right here, and that would take us perfectly to the top of that resistance. So that is a potential scenario. If the S&P 500 manages to break out successfully above here and not start trending down back to this level of support, if it can break out, that could potentially fuel a rally past this resistance and into this resistance right here. Now, this is just a potential scenario. We're at resistance. This is not the type of trade that we want to take, that we want to participate in, but it's definitely interesting to look at. So now let's take a look at the US dollar currency index. This is such a powerful index to look at. It determines how well assets do. If the dollar's strong, you're going to see stocks, precious metals, emerging markets, commodities struggle to go up. But in a weak dollar environment, that all changes. So you can see what I've highlighted on this chart is two big wedge patterns on the dollar. Back in 2018, we had the same type of development with a clean downtrend line and contracting price action with divergence. Right, we can take a look at the MACD here, and at least on this wedge pattern, we have clear bullish divergence on this chart here, signaling that we were likely to see a counter trend rally on the dollar. We knew that we were oversold. We knew that sentiment was overextended. And I can show you an article from January 4th that we posted on gameoftrades.net. We were highlighting this divergence right here, this wedge pattern, the clean downtrend line. And we also highlighted the extreme bearish sentiment that we had on DXY over the previous months that could potentially lead to a powerful rally on DXY. So that's what we're currently seeing on the dollar. It's a powerful counter trend rally from the overextended conditions that we had here. This is normal price action that you should expect during a bear market. And we do not think that this is going to be a similar scenario to what happened right here, where the dollar actually began another huge leg up throughout the next couple of years. First of all, the dollar's a lot weaker here. You can see this powerful breakout across this zone of resistance. It was extremely impulsive. Then you had a back test and a successful resumption. What we're seeing right now, if we go on the 8-hour chart, is that the dollar is actually struggling to test this zone of resistance. We can call this a resistance zone between 92.7 and 93.4, and it's currently testing that with bearish divergence as well. So this is the first bearish divergence that we have on the dollar since a very, very long time. We don't have any bearish divergence throughout this downtrend. This is the first time we have that. So that's the first reason we expect a reversal of this counter trend rally. And the other reason is that monetary conditions are still very, very easy. There's still a lot of money flowing in. Interest rates are low and fiscal spending is high. And what does that do to the dollar? Well, it weakens the dollar. It weakens the dollar because you've got a higher supply of dollars and pushes the price down. So that's simple supply and demand. And we do expect this rally to come to an end. And if we fail here and we see the dollar reverse and start to come back down, that's when you can start to see stocks perhaps break out of that long-term resistance, and also gold start to outperform, and also gold and silver begin to outperform. So now let's take a look at the Nasdaq 100. I want to first take a look at the price action, and then we're going to take a look at the performance of the tech sector compared to the S&P 500, because that's currently at a turning point. It may not seem like this on this chart, but the tech sector is really in a very interesting position. So I want to first take a look at the price action. We're going to put on the 100-day moving average on this chart. Very significant level, right? A very important support level. It's not perfect, right? You do have dips below and snap back above, but generally it keeps the uptrend going, right? And you can see that time and time again. And once you get a proper breakdown, you can see right here, a proper breakdown in 2018 backtest, rejection, and that tells you the tech sector is ready to go down much further. So what are we seeing right now? We saw a brief dip below, snap back above, and now we're testing it. So this is a healthy price action. We haven't broken down yet. We don't have a bearish bias yet. In fact, we still have a very, very bullish bias on the Nasdaq 100. If we just zoom out and keep our perspective here, what do we see? We have this price channel throughout the bull market that was broken in June, back tested, resumption, and we're above it now. So that's the market telling us the Nasdaq 100 wants to go higher. Now, if we start to see a breakdown below the 100-day moving average and break down below this level right here, back into the channel, that's when we could see some big moves down in tech. But that's not a scenario that we're looking at just yet. Right now, tech is just sandwiched between this level of resistance, downtrend line resistance, and the 100-day moving average, and a strong level of support as well. So this is going to break one way or another, and you have to be looking at that because that's going to determine exactly where the tech sector is going to go over the next few weeks, if not few months. And I'm going to show you exactly why. This is the Nasdaq 100 divided by the S&P 500. We've talked about this before. We've mentioned this before. It's the performance of the tech sector compared to the rest of the market. Right, so you have the dot-com bubble, crazy price action throughout this period. And you can see the outperformance of tech since 2002 right here, the bottom of the bubble burst, and you have a outperformance throughout the last 20 years. And this is what has been pushing the entire stock market higher. It's been all about the tech sector. And if you don't believe me, I'm going to put a correlation indicator with the S&P 500. So this indicator basically tells you how correlated the S&P 500 is to this chart. So if this indicator is above the zero line, that means that the S&P 500 goes up when tech does well. If it's below the zero line, it means that the S&P 500 does well when tech does bad. And you can see, obviously, that there's a positive correlation. When tech does well, the S&P 500 performs well. So that's the proof that the market is all about tech. So that's the first point I want to make. Now, if we zoom in here, you can see what's happening. And we discussed this in one of the previous episodes. We have this massive price level here where the dot-com bubble reversed and acted as resistance. And you can see what happened throughout the health crisis here. We broke out above the level, back tested, and we're consolidating around that area. Now, if we zoom in even more on the daily chart here, you can see what's happening. This ratio is struggling to stay above that support level. So if we start to go down here, that would be a false breakout, and we'd see some much lower lows on the Nasdaq. And so that could potentially lead to lower lows on the S&P 500, right? Because it's all about tech. So you need to be watching this. It currently seems like we're breaking down. Now, I wouldn't put too much weighting on that just yet. What we want to see is a breakdown, backtest, resumption. So that hasn't happened yet. We could still snap back here and resume that tech outperformance. We're definitely looking at that very closely. Now, if you enjoyed this video, make sure to go and check out our website at gameoftrades.net. You can go and check all our articles, our trade ideas, our opportunities, our targets for certain asset classes. So if you're interested in all that, make sure to go and check it out. We're really starting to create a nice community, a lot of interactions, and just a ton of great ideas from the community. So if you want to participate in that, make sure to go and check us out at gameoftrades.net. Now, that's about all I wanted to cover in this episode. If you enjoyed, make sure to drop a like and subscribe to the channel if you haven't already. In the meantime, good luck on your trading and see you next time.